So the premise behind 4-hour levels and daily levels is going to be the same philosophy and premise, right? And so the premise behind it is that during these time frames, you're going to have uh, same time frames that target the same time frame, right? And that's kind of like price cycling and completing a cycle with that particular time frame. And so I found this originally on the 4-hour, and through back testing and labeling out every candle with lines, I was able to see that price would return to these key points, and it would happen during the same time frame. So like if, let's take for example, if we go over here and we have this 10 a.m. candle, well, this 10 a.m. close was never mitigated by another 10 o'clock candle. We move through time, 10 p.m. doesn't hit it. Well, this 10 a.m. candle returns and mitigates this close. At the same time, it also mitigates this open of this 10 a.m. And so I back tested this for a while and found that we have uh, these pairs of candles where they're targeting each other. And so initially I had them marked out, and then I came up with the indicator in which you see, in which it color codes it, so that was easier for my eyes to pick up on these points of interest for the same time frame pairs. And when we look at the time frame pairs, if we just go to, this is the indicator and it's pinned to my channel. If we go to the settings, um, I'm on Eastern time. These are set for Central right now, but everything's showing in Eastern. So it'd be 2 o'clock, 6 o'clock, 10 o'clock, and that's your AMs. And then 2 p.m., 6 p.m., 10 a.m. All right. And they're just color coded so that the pairs match, right? So you have 2 a.m., 2 p.m., 6 a.m., 6 p.m., 10 a.m., 10 p.m., so on. All right. So when we're watching price action and we are formulating ideas, the levels that are marked out aren't just automatic levels where, hey, this level's super close, so I'm gonna just blindly go in. Okay. And a good example would be if I took this 6 a.m. level and I marked it out and I was trading yesterday and I was like, oh man, that's really not that far away. This 6 a.m. candle, let's see. Well, obviously it did not go to this level. All right. So we can't blindly just mark levels and then take trades. We still have to formulate price structure and where is it most likely to head. Sometimes these will bounce around, and we'll see that in like this candle, the final 2 p.m. candle today. If I was to mark out, if I was trading right here and I was to mark out levels that had not been tapped, okay, originally this was looked at as highs, opens, closes, lows. And then Addie, who, if you guys have any questions in the chat and I'm not around, Addie was probably the first one to use this theory that I back tested and found happened repeatedly. And he stumbled upon something that made this even better. And he stumbled upon where when you have a level like, let's say this 6 p.m. open, see how this almost reaches up here, this 6 a.m., but it doesn't hit it. This is a two-part deal. One, if we reach up towards a level and it just doesn't seem to be hitting the level and it's stalling in price, we're probably going to have an opposite move away from this level. Okay. That's one part of it. So as I mark this out, okay, we didn't hit it. And then I'll mark this next one out. All right. Price doesn't hit it again on this other 6 a.m. candle. Comes real close, and then we get a move away. This candle targets, it opens, manipulates down, and then it targets this level, right, which is the close. Okay, so we can see an example of right now this PM candle manipulating and then coming up and taking out this level. So when I say it's untapped, that is showing that it doesn't mean that this level hasn't been tagged by another 4-hour candle. It means that this level hasn't been tagged by the same time frame pair candle. Okay, so as this opens, this would be an untapped level, and as it hits it, now this level has been mitigated or it has been order paired, right, in the same time frame, because obviously this 10 a.m. candle did hit this level, but we're not looking for a different time frame. We're looking for the same time frame pairs. And when you look at how these pairs work together, you'll be able to throw these targets on and it'll give you destinations and pivot points. And that's kind of the key point to this is that, well, how do we know that, this candle is going to deliver this much? Well, I think Addie was talking about this yesterday. If we see this and this opens and manipulates up and we had kind of a stall in price, we had 4 hours where we just failed to really push higher. And this candle opens and we're failing to really push higher. And now we have all these levels that haven't been hit below us. Whoops. 6 p.m. Okay. So we had 1, 2, 3, 4 levels that hadn't been hit below us, and they're all pretty close to each other. So more than likely, after the manipulation, I would probably want to target these really close levels because they haven't been hit by another 6 o'clock candle. So the probability for me would be, well, we could short this candle and we could target at least 4 of these levels that are pretty close. And that's about 150 points right there, which is plenty of points. So they're color coded because they're color coded for pairs of time, right? So 6 a.m., 6 p.m. because we're looking at the pairs. So when I'm looking for, like yesterday, I called this out in the chat, right? I said I'm looking for uh, this level to be hit, which was at 2 a.m. Okay, price was at right about 8:55 is when I called it out. Okay, so look at all these levels that the 2 o'clock levels had. This is a 2 a.m. candle. So see how when we get into the certain time frame, so we get into a 2 o'clock candle, I'm looking for other 2 o'clock candles. That's why they're color coded. Okay, so if I look at this close, before this candle opens, there has been no 2 o'clock candle that has hit this level. There's been no 2 o'clock candle that has hit this level. This previous level has been hit by this 2 o'clock candle, so I'm not marking this level. The next level down would be this level that has not been touched by this 2 o'clock level. So as this opens, it was, where are we at? We're at, price was at 855. I'm targeting because there's so many levels all in a row below here, and we've shown already that price is really willing to push lower. In the stream, I said my target is this. I said 704. Okay, it's a 705, 704 level. I think, what's the close? 705.50. Okay. And so now when I enter, I'm looking for shorts and I'm looking for all these levels to be ran. And that gives me a destination. Here's another 2 o'clock level that didn't get hit by any other 2 o'clock candle. And that's a 2 p.m. candle. We also have this 2 p.m. candle right here. Okay, so here's an example of where it used it as a pivot point. So look what price did on this 2 p.m. candle. And we'll just look at all the levels that FOMC took out. Let's clone this. Okay. Clone. And we'll drag that all the way down here. Okay. Oh, no, let me replay that. All right. So this 2 o'clock candle, right? 2 p.m. Again, the reason why we're looking at bodies is because the candle bodies is what tells the story. That's the most important thing, right? Like when price balances something and you get a big wick down here, why do these big wicks get ran later on? Because a candle body didn't balance. This wasn't balanced. It was a wick that came down, and on a smaller time frame, it was balanced. But on the higher time frame, this wick really didn't balance anything. The candle body now comes and balances the market. Okay, that's the premise for the market. It's constantly balancing itself, creating imbalances while it does it along the way. All right. So this 2 p.m. candle, it opens, it manipulates up to this 2 p.m. level that hadn't been tapped. So that's why we're targeting these bodies that opens and closes as untapped levels. Manipulates up there and starts rejecting. So it hits 1, 2, 3, 4, 5, 6 levels. Rejects at a 2 p.m. candle, wipes out 2 a.m. candles, and finishes off at a 2 p.m. candle. And then after this level was hit, I said, wow, that would be pretty cool if it came down here and hit this level as well. And it ended up doing that after hours, kind of like I talked about. So when you put these levels on your chart, this isn't just a, like, I blindly enter and hope that it goes in that direction. This is still, you have to look at market structure, right? And you have to look at what price has done and what price should do. But the cool thing is that this gives you pivot points and manipulation areas. So if when this opens, I have these marked, I could say, you know what? If this goes up first, I'd like to look for something on the 1 minute or the 5 minute chart at this level that tells me that price is hitting this and reversing. And then I have all these other targets below me that I can target. If you only feel comfortable targeting this or this, that's fine. I was looking at this because we had so many that were not ran. Like this came real close but didn't run it. So I was expecting price to at least go to here. You can leave runners for some of these bigger days where the volatility is being injected, like FOMC, CPI, days like that, NFP Friday. Now, does everyone see how I'm using these levels and I'm coordinating with where price is going and marking them out and how I'm waiting for this 4-hour specific 4-hour candle to use these levels appropriately? And I don't view them till we're in that same time frame, whether it's 2 a.m., 2 p.m., 6 a.m., 6 p.m. Is everyone kind of, does that make sense for everybody? If not, let me know because again, this is just the basics. And so I want to make sure that it's crystal clear or if there's any questions before we kind of proceed on. It's pinned to my channel. So if you go into my channel, it's the custom 4-hour candle colors. And on the daily, it's called daily time theory. Um, Again, it's not that I focus on opens or closes more. It's honestly, to me, it doesn't matter if it's an open or a close because I want to see where is price going and where are the closest levels that it might hit. So in this example, yes, it manipulated above the open and then it delivered to an open. You know, it also took out the close, the close, the close. So if I see a level that just hasn't been hit, and again, both opens and closing of price is important because it's the candle body, right? That tells you where price opened for the day and it tells you where it closes for the day. And that gives you a lot of information on what price was doing in that moment and where it was headed. Good so far? Okay, let's look at today's price action because I think this is important to show both sides of it. It's easy to uh, cherry pick something that was good, like this FOMC, a lot of volatility, hit a lot of levels, really, really nice play. Okay. This price action can become a little bit more difficult. Okay. Because we're looking back, and when we look back, we really don't have like none of the levels really got hit other than if I go candle by candle, this 6 p.m. candle really didn't do anything other than probably hit the midpoint of this and go above and below it, right? So the midpoint of the candle body. 10 p.m. candle manipulates up. Here's another good example. See this 10 p.m. candle? If I go forward in time, this is the next closest 10 o'clock candle, which happens to be a 10 p.m. candle. This level did not get hit by this candle. This level did. So when this candle opened, it manipulated up and came down and hit this level. Okay, so this level is not important. This would be a level that's important. Okay, we'll clone that. Okay, so I have these levels, all right, and let's change this to a 10 a.m. because that's a 10 a.m. So as the 10 p.m. candle opens, and we'd have to look at this on the 5-minute chart or the 1-minute chart. Let's go Thursday. Still on Wednesday. Okay, here we go. So I've marked these levels out, right? This hasn't been hit, this hasn't been hit, and this down here hasn't been hit. Okay. This 10 p.m. candle opens up. And man, it gets really close to this untapped level. Okay, remember when I told you that it can get really close and that usually sends price in the opposite direction? You can see how price starts to stall and it's not continuing to drive through that level or to hit it and then reject it. We even get a big movement down. Okay, and then we get an OTE entry off that range. And then price continues down, and where does it go to? Okay, right at the end of the 4-hour candle with 15 minutes to spare, it hits that level that hadn't been tapped. Okay, really close, and then targets that opposing level, okay, which was back here that we looked at. There's been no 10 o'clock candle to hit that level. So as this opens, it gets a nice manipulation up. Where's the opening? We got right here. So it almost, so here's a great example of what you have to watch out for. Look at this 10 o'clock candle. This is the opening candle. And you have this level marked out down here. Okay. And this drives down and you get in short. This is why there has to be risk management around this because you might think, wow, this is really close. It's got to go here. That's what Kaizen said. He said when it gets close, it's going to go there. Look at that manipulation to where it doesn't get there. And then kind of stalls, and then drives up. If you're not creating risk management around this and understanding price action, then you're going to sit here and your position is going to go way negative. Okay. And it's easy to look at the 4-hour chart and say, oh man, yeah, we just take a short all the way down to here. Well, look at where it actually opened up at. It opened up with this candle and it came within 13 points. Okay. So teased that level. Wasn't ready to go down there yet. It had some unfinished business up here. And that's a different lecture, but it was basically rebalancing a range. Stalls, pushes away, and whatever your entry model is, okay, I like to use fib to find some sort of entry model this is less aggressive, but into premium of the range. That's a really nice move from here all the way back down to here where this failed to tap it at open, and then it finally does. Okay, so you're looking at 124 points in Asia during one 4-hour candle. Okay, that could be enough to finish your day. So when we use this and we're watching price action around it and we have risk management around it, it's going to give us some really great plays. And it's going to hit these levels because that's what it does. It cycles over and over again. All right. Um, I do not mark the highs and lows. I used to, but highs and lows aren't as reactive, or they don't have as many like draw as the actual opens and closes. Obviously, highs and lows are important, right? Because any 4 hour high or low taken out is kind of a big deal. It's a big time frame, and so we usually should see some uh, reaction off of that. All right. Any questions so far on what I explained, what I showed on the 1 minute, and why it's important to have risk management around these levels or be able to flip bias? Okay. Again, this open, I want to say that I shorted this and was hoping it was going to hit this and come up here. It did not. And so once I saw this candle engulf this candle engulf this candle after running some lows down here, okay, to me that volume, this I was talking about this in Anya's stream. I'm not going to get off topic, but really when you see some sort of reversal, like look at this candle body compared to this candle body. Look at the volume of this body versus this. That tells me that after this level was hit, there was so much buying volume that it really outweighed the selling pressure right here. So I would flip bias like, it's probably not going to, it's going to save this for later. Okay, so important, again, 10 o'clock opens, we need to have some sort of risk management. It's okay to initially say, you know what? Look at this. This is cruising down pretty heavy. I like the way this looks. I'm going to get in short right at the 10 o'clock open. I'm going to target this 10 a.m. untapped, but we need to have risk management around that because this happens a lot where it teases the level, teases, and then comes back and tags that level. Yeah, yeah, you're I get that question. Yeah, so to me that was the beauty of the 4 hour was that because it's such a large time frame, when that candle opens up, like let's say I'm trading London, right? And so we get or I'm trading, this is I guess London and going to New York Open. As soon as this candle opens up, probably about 15 minutes prior to, I'm marking out levels. And so if this is about to open up, then all I'm focusing on is what hasn't been hit for that candle pair. So 6 a.m. candle, I'm looking back at the 6 p.m., which was the initial, and I'm just marking that out. And then I look back left. What's high? Well, this is the next thing that's high. I don't believe after all this that price is going to come back up here. So I got these two. I got this, which could actually be a target because it comes back up into the fair value gap, but we'd have to see what price action does. And then we have this down here. So, and then there might be something back here. What do we have? We have this down here, and basically this balanced range of bodies. This kind of comes like into the 50% level. So then again, let's see, where's that? Let's go 6. Okay, here we go. So here's a 6 o'clock open. All right. And we just had this previous candle kind of fail to come back up here. We're looking at price. As this opens, this continues down after this high was put in. This might be something where I'm looking at these two levels from the 6 p.m. candle and I'm like, okay, let me see what price does around this. Okay, so I might just wait and wait and wait. And so if I have this high, I might say, yeah, you know what? I'm going to take this high to this next low that was put in, and I'm just going to see what price does in this range. Is it looking to blow through the premium, or is it hitting premium and showing some sort of rejection sign? Okay, and if I just look at this, again, here's our 6 a.m. candle that opens up. We kind of drive down and we really hold at 50%, and then we push even lower below this range, and then we rebalance. And so now I'm looking at this 6 p.m. untapped where price opened above it is failing to go up to this, and we have this up here. And now the next time it comes up to this level that it opened above it, now it's really struggling to close above this level. And so we need to look at clues about how price actually reacts around these levels. So the 6 a.m. candle, price opens and it closes below this untapped level. As it comes up, this candle, the very next candle closes back below and closes below the candle that drove back up above this level. Okay, so it had more volume when a candle closed above that level to the downside than it did with continuation to the upside. It pushes real hard one more time and cannot close above this candle and then sells off. Very weak return, sells off, covering all of these bodies with one candle. Very slow return back up and then sells off. Okay, one last ditch effort. So seeing this price action, this might be the conservative entry back here after waiting and saying, you know what, I'm unsure if it's going to hit this level up here, but I don't just want to long blindly. And price seems to be heavy right now, and it's so maybe I want to take shorts, and maybe that entry is at this level back here, right? This is another range, and this is another OTE entry right at this level. Okay. And then what do we get? We get it if we take our very next level, which is this that hasn't been tapped. And guess what? This was the gap down. This only has price delivering up. Now we have price delivering down to fulfill this order pairing and this imbalance. So it makes sense for price to come down here. And now this area of price that gap down and only has a candle body up through it now has a candle body down through it, and we've balanced that area. That's logical. And so that would have been a great target back down to this untapped level. Yep. Once it gets swept, there's no need to watch it for future. Does price bounce around it? Yeah, price will bounce around it, and you can see that here. You can see it drive through the level, come up and kind of holds it, and then goes through, then uses it as um, now as uh, resistance. Okay, so but that's if you want to continue like scalping and you want to continue to use these levels within that time frame. Okay, we're still within that 6 a.m. candle. This is only 8:43, but if you're still within that candle, look at how price uses that. Drives right back up through, rebalances, drives right back below this level, comes up, rejects it. Oh, we'll send a wick up there, even harder rejection. Okay, and we haven't hit the 10 o'clock candle yet. Okay, so you can still use these levels like so. I'm holding positions until they hit the levels that I think are going to be hit. So if we went back to the 10 p.m., well, that's a long time. If I got in right here, this is only an hour into the 4-hour candle, and it sweeps it with 16 minutes left. So that's like a 3-hour hold, a 2.5-hour hold. Because overnight it might do that. It just might have smaller ranges for the candles and take forever to get to these levels. During the day, you're going to get better or swifter price action because you have more volatility. Okay, where you have something like this where price moves extremely fast. Okay, so when this opened up, I was initially targeting down here, wanting to see the low of this 4-hour candle run, which also had this 2 p.m. untapped, which is way back here. Price remembers every candle that it has. Hmm, sorry, this one right here. That 2 p.m. And you can see that 2 p.m., the initial one I had, the top of that candle, got hit by this 2 a.m. candle. It was like right here. And that 2 a.m. candle hit it from all the way back there. So sometimes when the price is on the opposite side of the curve, you got to scroll back a little bit. Okay. And I want to see, maybe continuation of sweep the low of day and then retrace. Okay. Didn't do that. It was moving nicely down. And then we got CSD right here. Okay. So this level wasn't swept. So I got stopped out and then I re-entered long because price started moving quickly in the opposite direction. And all I did was just target this first level right here. That was it. I had already got some good trades for the day, and so I'm just targeting this one. And that is 2 a.m. We'll just bump that up to here. This is making sense, guys? How like when a certain candle opens up, it's okay to like have an idea and say, oh, well, maybe it's going to continue. Just have risk management around it. So if it doesn't go that direction or price changes, you can flip your bias. It's you have to be able to have some flexibility like that. Okay, and boom, that was tagged. And it happened pretty quickly. So that was a good trade. And guess where else it went? It hit this one. And then it went into a 2 p.m. fair value gap. Okay, does everyone understand the 4 hours? How we're marking it, how we're looking to target it, how it's I show it on the lower time frame, and how we can uh, base ideas off of it, but also need to be flexible to flip bias, right? Because we have levels out there and we can anticipate like, hey, maybe it's going to go here, but if we're wrong, we need to be flexible. So that's where strong risk management comes into play. These aren't just they work really well, and there's usually about 2 or 3 plays that hit every single day. Like if you marked out all the untapped levels for every pair of 4 hours in one day, there's at least 2 to 3 that are always going to hit, like clockwork. All right. If you want, part of the basics is you can create a folder in your object tree. You can have 6 o'clock, however you want to label it. And I could take all these 6 o'clock levels and I could create a folder and name it. I could say 6 o'clock untapped. Okay, and then I know that I mark them out before the market opens and I have all my 6 o'clock levels in here. Okay, and then I can lock them. I can hide them if I don't want them on my chart. And I can open them up when I'm ready for that. And I can mark these out prior. So if I want to do this while the market's closed and start marking out some 10 o'clock levels, some 2 o'clock levels, I can mark them out, create a folder. Okay, start with one and then create folder, name it, and then there you go. You can lock it and you can hide them. That way your chart doesn't have a million lines on them and you open them when you're in that very specific candle. Okay? This is how we keep everything organized. All right, any questions on the 4 hour? You can right click and check sync globally, and that way it'll sync on all your charts. No, as long as it's the same time frame, Dylan. That's why they're colored in pairs. So 6 p.m., 6 a.m. I'm looking for 6 o'clock levels to return to each other. That's what this does. The 4 hour time frame uses these pairs of time to order pair with other same time pairs. So 6 o'clock candles are always going to look to order pair with 6 o'clock candles, whether it's AM or PM. And then your 10 o'clock and then your 2 o'clocks. If you have a hard time finding targets or where to take your trade to, this is very helpful. And when you watch Adrian and him and he puts his standard deviation levels, when you see that his standard deviation levels line up with these 4 hour levels, it works really well. When JD has his quarterly time levels and it lines up with these 4 hour levels, it works really well because that's more confluence. And that's happened many, many times where it's like, oh, this Q3 inverse that JD took, I happen to take the same one. It rejected a 4 hour level, and then he takes it to TMSO, and oh, that was another 4 hour level. It's amazing how all this stuff lines up. So this isn't like you have to change the way you trade. These are added confluence levels that you can take as targets or pivot points. Make sense? All right. Okay, moving on to the daily. This is the exact same thing. So when I'm looking at the daily, I am color coding every day of the week. And it is the same thing, except for now we just have one day of the week looking at other same days of the week. So if we are in Thursday, then I am marking out only Thursday levels. Okay. And the levels that I have come to mark out to keep it very simple and not a lot of lines on my chart is the untapped levels, which is going to be your opens and closes. And then if you have a long wick, I like 50% of the long wick. If you have a large body, I like 50% of the large body. Okay, because that's the equilibrium of a previous time frame. So Thursday, if I start what's close and I work my way back as Thursday opens, it would be, and you can template these. So you just go over here. Okay, untap Thursday. Have any Thursdays tap this level? No. Mark it. Untap Thursday. Have any Thursdays tap this level? No, this one came close but did not tap it. Mark it. Okay, now I got to go back because we do have a lot of daily structure down here. Okay, this level, oh, this Thursday hit this level. Okay, so that's already tapped. Okay, this level, oh, this Thursday already hit this level, and that other Thursday did again. So let's mark this one and see. Okay, then I scroll across. Nope, comes close, doesn't hit it. Nope, nope, nope. Okay, good. We got that. Moving lower. Okay, this is untapped, but it also did not tap this one. Did this one get tapped? Yep, this tapped this. Okay, so this is untapped. There's no Thursday that has tapped this level. And we'll tap this one right here. Okay, now we come back. We have all our levels. Oh man, look at all these levels that today worked price around. And now we can look at price action all around this. And so we have all right. Oh no, that's 6 a.m. Yeah, I'm on the 1 minute. Let's go to 5 minute. All right. Market open. Thursday levels. Market opens right here. I go short. I'm targeting the untapped Thursday. Once I see that it runs this low and fails to go short, I'm sorry, initially I was going long. Stopped out, immediately reverse short. Now I watch price action after it runs this low. Green candle rejects and gets super close. I'm out of my short. Immediately go long because now it came close and now I'm targeting this one that I originally was targeting right here at a I was looking for a discount of this range to go higher. So now I'm targeting this and boom, targets it. Okay, so 2 trades short then long. Got the level. Price goes up. Again, we have this massive range that needs to be balanced. And this is why it's important to look at ranges that haven't been balanced at all. Right back up to here, pretty much balancing right to the bottom of this green candle and pushes away, re-entry, short, back down to this level. Because what needs to happen at this level? Well, this range needs to be balanced. Boom. Price holds below and then comes back down to this untapped Thursday. Okay, this isn't even using the 4-hour in conjunction with this. This is just looking at how price reacts around these Thursday levels on Thursday. Hits the one that we missed back here. Back up to this level, really rejects again after we see it reject multiple times. Once it closed below it, push through. Now we hold this level, again rejecting. Now we hit this level. Now we push down to this level, push through, and we close above. Now we're dancing between levels. Okay, holds. which also rebalances this range completely. And then back up to this level. Okay, another rejection. So we can see how these can also give us targets and confluence when we use it in conjunction with 4-hour or other things. Okay. Where is, disappeared. There we go. Let's let this load. All right. Okay. Q3 inverse, 1 minute fair value gap. Price holds 50%. We're in the Q3 and boom, we have a level that's right above some liquidity levels. And during this Q3, we go to that untapped Thursday. So even though it's been used, price still bounces around these Thursday levels during the Thursday price action. Okay, and look at TMSO sitting right at this level. If you didn't have these levels, you would say, look at price action, reject TMSO multiple times. I'm going to short TMSO every time. Look what's sitting right there as well, this untapped Thursday. So again, you can use all the styles of Kingline that are provided by all the mods at Kingline, and these just give you targets and confluence. And you can see how price rejects at the levels. Does that make sense for daily? And it's the same premise as 4-hour. I can do that in the main chat, boss, for FIP stuff. But you can see how I systematically went, what's the closest Thursday? Boom, market. Next Thursday hasn't been hit, market. And I'm coming all the way back to these levels because guess what? We're on this side of price that's cycling back down into this area of September of last year. So you're going to have to go back at some points in time. Here's a nice midpoint rejection of a Wednesday where it doesn't quite hit this one, it runs this one. And so we reject the midpoint of the body. Here's a Wednesday, we reject the midpoint of a Wednesday body and we send price lower. And we have a level right here. See how long this wick is? This Wednesday low would be of interest to me on this candle. And I would have to go back and look at Wednesdays over here. And let's see if this hit Wednesday untapped. Yeah, price ends up closing right at that previous Wednesday level. That Wednesday untapped hits that one, hits this one, 1, 2, and closes at the previous Wednesday untapped from all the way back here. Boom. Targets. Yes, it is recorded. So again, this is why midpoints, because I don't want to say I don't want to go long up here and be like, oh, it's so close to this. I'm going to long this because this is going to wreck you with poor risk management. It's more like if this manipulates, I'd like to see it manipulate at least to this level. This would be cool because it's a new day opening gap up here. And I'll go long from open up into here. But once I start getting up into here, I'm going to have to rethink where I'm going. So don't long when we're already like in a premium just because this looks like it's 25 points away and you're like, cool, I'll just scalp this 25 points. You really get burned trying to do that. So again, we still have to think about uh, big picture price action, right? We have all these previous day highs that keep getting ran. Is price going to continue to push up? Well, if it does, I'd at least like to see some sort of retracement after all these highs got ran. Multiple highs got ran and no lows got ran really, other than this gap down. So again, just be very careful of when you're trading. We don't want to long in premium, and it's hard to short in discount. I think that's something that all the streams I've listened to with all the mods, that's like a constant thing that's preached in Kingline because it's not, the probabilities aren't great for that. All right, any questions? So this was the basics of how we hunt them, how we're looking for. Both the indicators are pinned to my channel and it's color coded so that you can easily draw your eyes to where you should mark out the levels. Daily time theories for the days. Custom 4-hour candle colors is for the 4-hour. And they're levels that will probably be targeted. There's at least, like I said, on the 4-hour, there's at least 2 to 3 every single day that offers anywhere from 80 to 150 points. You can use them in conjunction with other stuff. Daily, there's usually 1 or 2 daily levels that get hit. Um, let me give you an example of something that's probably minor, and that would be probably like this Friday right here. So we have this level that got ran, and that was it. Did this level get ran? Okay, cool, we got 2. Nope, this one already ran that one. So yep, 1. This one didn't get ran, and this one didn't get ran. Okay, so that's a Friday where it's like it's an inside day, a lot of consolidation, and you get one level that's ran and the 50% of the candle body. Not every day is going to be an A plus day, and we all know that that's trading, right? So some days it's going to be beautiful, and it's going to, like Thursday, it hit 4 different levels, and then other days can be like this where it's real consolidated, it's not really moving, and there's nothing to target on the daily. And so then we would look on the 4-hour. And if 4 hours struggling, then for me, those days I'm going to go very light on those days. I'm not going to push it. Um, 4-hour and daily from all the back testing I've done, uh, repeat very well. Anything below and above, um, it's very convoluted and it's almost speculative. So these two I've back tested quite a bit. Addie's back tested quite a bit, and it's a very repeatable um, daily process that happens like clockwork. You got to watch the recording, boss. All right. Any other questions on this? Again, I try to go over this stuff like once every 2 to 3 weeks because we get new people. Um, I'm more than happy when the market closes, like doing a community stream. That's pinned to my channel, and I think Addie linked it in this chat too. Um, every couple weeks, I try to do something, and I'm more than happy to talk about price action and stuff like in these community streams, because I think that's also a good part of learning is understanding ranges and whatnot. Yep, it's untapped until it's been hit by the uh, same day or same time frame. See, where's a good example of that? Um, so like here this Wednesday or here this Tuesday. This was a holiday, so it's colored Monday. So it was a Tuesday, Monday combined. We have these days that are tapping into this open, and then it's not till the Monday taps into this open that we get a more expansive day, right? So we're waiting for the same day or the same, right? Like these levels, these 6 o'clock levels, these are hitting, but it's not till this 6 a.m. candle opens above them and basically runs them. And this is completely balanced back into this consolidated area. This leg down is now completely balanced on the 4-hour chart. And then we get the push away, right? So that's, again, we can short this stuff, but when do we want to look to short? Well, we might want to look to short during the 6 a.m. candle, as this right here is a 6 o'clock high, 4-hour high. So that prevents early shorting or early longing when we can wait for very specific candles. Here's your example of like a low. Okay, it's not necessarily marked out. Here's an untapped on the 2 o'clock. Here's an example of a low. Okay, these candles, the 6 a.m. and the 10 a.m. run this low of this 2 a.m. candle. It's not till the 2 o'clock candle and that low is run by the 2 o'clock, also this untapped, that price really expands away from it. See how the times match up though? See how this low has been ran multiple times by these 4-hour candles, but it's not till the same time frame on the 4-hour that it makes its move back up. That allows us to wait for really good timing on our ideas. Yeah, basically. So if I move this up to here, once this 2 p.m. candle hits this, it's been mitigated. This 2 o'clock has now been order paired with another 2 o'clock candle. It's been mitigated. So then I would not use this anymore. The new one would become this. You're looking at the daily. Okay, so what about Monday? You're talking about the high of Monday? Oh, 4-hour. Monday. Right here. Okay. So here's 2 p.m. So this candle right here, we showed that it mitigated these levels. Okay, because we're looking at 4-hour pairs on the 4-hour chart. It's a different day of the week, but it's this is like it's like everything, right? Like if I was to look at a 15-minute chart, the cycles and price would look way different on a 15-minute chart than it does on the 4-hour. So 4-hour, we're looking at the cycles of price on the 4-hour and how the paired candles correspond with each other. So I'm not thinking about days of the week on this chart. I'm only thinking about days of the week here. So whatever Friday does, who knows? Maybe I'll look at if Friday closes below here, maybe I'll look at is this going to be a rejection point for next week, Monday? And price is going to move up into here and then reject. I don't know. We have to see how Friday goes. But like if we're looking at Fridays, really, we have this level, this level, this level's come down and already tapped this. So the very next level is going to be down here, pretty low, which if we look at the logic behind this, okay, if we broke the range that was the large range we were in, we came back up into it, we rebalanced, and now we're starting to cycle back below. Is it logical that Friday might close below the range and it might run this Monday's low or close below it because this was the first reaction of actually running the low of this range, but there was no follow through? So maybe this Friday could be a level that would be targeted tomorrow. It's possible. And that's how I formulate logic around these levels, right? I still have to look at overall structure and what price is doing. And I formulate ideas around these levels when I place them. Like what is possible or likely to happen? And then be flexible to say, on the flip side, what if we just ran this low again and we closed back up into the range and Friday pushes higher because we rejected this low again and we couldn't close below it? I have to give myself two sides of the coin so that I'm not just focused on, okay, it's got to hit this, it's got to hit this. I'm shorting everything. Everything I'm shorting so I can get this level. It's watching what price is willing to do and looking at two sides and having areas where, okay, if price is going to go higher, then where would I not want to see it like continue to close below? Oh, great. What's all I see is W, but it looks like you're riding a motorcycle. Okay, great point. Daily time theory or 4-hour. Go to the three dots. Visual order. Bring to front. Now the colors will stay on when you go to the daily chart. They won't disappear. These are the colors I chose because these are the colors I like. But you can pick whatever colors are easiest for your eyes or whatever you like. Yes, so Friday, I'm marking out the Fridays that haven't been hit. This has been hit by this last Friday. This has been hit by the last Friday. So then really I only have the open and the close of the previous Friday. We are within this range. Okay. And then like we showed, would be this down here. Okay. And then I would probably use, because this is the low of the large range, right? October, November range, because this is the low, I would probably place this there and just put Friday low, large range, because that's a very key level, right? Like we've really rejected that level. Like we finally got down to it and we've kind of rejected it twice. So this is going to be a low, this is going to be a key range for, does price get to it again? Does it close below? How is price action on a lower time frame? Yep, Mondays with Mondays, Tuesdays with Tuesdays, so on. Yep, that's correct. So this would actually be my Friday levels that I would have marked out for Friday, for when the market opens. And then this is how I start. I mark these out. If you want, you can do like the 50% levels. They do get they are useful, I feel like, just because 50% levels are pretty key in trading. Um, I like to keep a clean chart, so I don't like too many levels on there, because it's like here's all your daily, and then now we start getting into 4 hour. Okay, but then I would look at the 4 hour chart and I would say, okay, where would price go to if I'm using 4 hour and daily? Well, I don't know. We kind of have this range that like did the rebalancing and then this came and closed below. So like maybe a manipulation back up into here. So this is a 10 p.m. candle and a 10 p.m. candle high, and this wasn't hit by this, and there's a Friday level there. Maybe price might return somewhere up in here to give me a nice short for the continuation, because this really doesn't look like a strong reversal pattern. So again, that's how I kind of throw out ideas and look at the market using these levels. We do have a 6 a.m. level that hasn't been hit for market open, that, and we have a high sitting in a fair value gap. So if we run this high in the fair value gap one more time and reject, that might be a good short. See, so just formulating stuff around the levels and what structure is giving you. Or maybe you're someone that wants to scalp to the fair value gap, and you say, you know what, price moving up. If I get some sort of manipulation below this level, or price opens below this level, this is 6 a.m., I'm going to target this 6 a.m. level right here because it's in the fair value gap. And this will be my 6 a.m. play. We got 628 to 705. And there's a Friday 50% sits around there. Okay. So maybe I'm going to target this. That'll run the PM high. Target this level. It's 80 points right there. Like even just scalping level to level, if it presents itself, it's 80 points. All right. How's that sitting with everybody? structuring trade ideas around it, marking them out, using the daily combined with the 4-hour to look at where structure is. Any other questions? The levels are slightly different on NQ versus MNQ. So I would chart because there's some lows and highs that are actually different. Like NQ will run a high, but MNQ won't for some reason. So whatever you're going to trade on, I would just chart on that. I chart on the MNQ continuous. I have B adjust on and I have settlement on. Yeah. Whatever you trade, I feel like charting on it. Works on all, if you're not just an NQ trader, it works on all assets. It works on MES. Um, so it's the same principles. You can see like how NQ, we didn't tap this one, it was lower. We just came to 50%. Well, ES, this 5 o'clock taps it. So it opens above this level. Look for some sort of reversal. You have the fair value gap rejection and short to this. And there might even be something way back here. That wasn't hit. Works on gold. Works on QQQ for options traders. Comes real close to this. We have a gap here. And then tags this level. Okay. So you got 2.5 points of that. Our gold, folks, I've shown, I know Cadell trades gold religiously. Um, I've shown him many stuff on here too that you can use these levels. See what we get. Dun, dun, dun. Like this is kind of a nice little short 6 p.m. 6 p.m. comes and runs this after almost hitting this untapped. Gets real close. Drives all the way down here. But I myself, I trade MNQ. Any other questions? All right. If there's no other questions, you guys always feel free to hit me up in chat, whatnot. I try to post, I post all the levels of my channel. Addy throws out levels in the main chat all the time. So you have at least two of us that are always posting about it. Swags doing a little more of that. So you have people that are talking about it and doing it again. It's just nice levels to have in confluence with your other styles of trading. It's not a style of trade. It's just a level that typically gets smashed on the chart. So if you can have a definitive place where you're going to target. That's always helpful. All right. All right, everyone. Thanks for joining. Thanks for listening in. Appreciate your time. And you guys have a good rest of your afternoon, and we'll have a good Friday. All right. Talk to everyone later.